By now, you've learned about diversification, asset allocation, and index investing. Today, we're going to answer a practical question. When you're ready to invest, should you choose a mutual fund or an ETF? The good news is that this decision is much less important than most people think. In fact, many investors spend far too much time worrying about this question and not enough time actually investing. Here's why. Mutual funds and ETFs are often built from the exact same investments. That's right. You can own two funds that hold nearly identical portfolios of stocks and bonds. One happens to be structured as a mutual fund. The other happens to be structured as an ETF. The investments inside may be virtually identical. Think of it this way. Imagine buying a bottle of water. One bottle is sold in a plastic container. The other is sold in a metal container. The packaging is different. The water inside is largely the same. Mutual funds and ETFs are often similar. The container is different. The investments inside may be nearly identical. So, let us look at the differences. First, mutual funds. Mutual funds have been around for decades and remain one of the most popular investment vehicles in the world. When you buy a mutual fund, your order is processed at the end of the trading day. No matter what time you place your order, everyone receives the same closing price for that day. Many employer retirement plans, including 401k SS, use mutual funds. They're easy to understand, they make automatic investing simple, and they work very well for long-term investors. Now let us talk about ETFs. ETF stands for Exchange Traded Fund. An ETF trades throughout the day just like a stock. You can buy or sell it whenever the market is open. The price moves throughout the day based on supply and demand. Over the last 20 years, ETFs have become incredibly popular. Why? Because they often offer low expenses, broad diversification, excellent tax efficiency, and tremendous flexibility. Many of today's most popular index funds are available as ETFs. Now let us discuss the question most investors really care about. Which one is better? For many investors, the honest answer is either one can work perfectly well. Remember what we've discussed throughout this course. Successful investing isn't about finding the perfect investment. It's about creating a good plan and sticking with it. If you're investing through a workplace retirement plan, you'll likely use mutual funds. That's just completely fine. If you're investing through a brokerage account, you may find ETFs attractive because of their lower costs and tax advantages. That's just completely fine too. The bigger question isn't mutual fund or ETF. The bigger question is, are you investing consistently? This is the most important question to answer, because a great investment that never gets purchased won't help you reach your goals. Now let us talk briefly about costs. Even though costs have fallen dramatically over the years, they still matter a lot. Imagine two funds with nearly identical investments. One charges very low expenses, the other charges significantly more. Over 30 years, those extra fees can quietly consume thousands or even tens of thousands of dollars. That's why low-cost investing has become such an important theme in modern financial planning. Small differences matter, especially when compounded over decades. Now open your workbook and review the mutual fund versus ETF comparison chart. As you look through the pros and cons, ask yourself, which option is available in my accounts? Which option feels easiest for me to use consistently? Which option aligns with my overall investing strategy? Remember, this isn't an exam. There isn't one perfect answer. The best investment vehicle is usually the one you'll actually use. Before we finish, I want you to remember one simple principle. Don't let small decisions delay important decisions. Whether you choose a mutual fund or an ETF, your long-term success will be driven far more by how much you save, how consistently you invest, how diversified you are, and how long you stay invested. Those factors matter far more than the container holding your investments. In the next lesson, we'll discuss one of the most important forces in investing, a force so powerful that Albert Einstein reportedly called it the eighth wonder of the world, compound growth. And once you understand it, you'll never look at investing the same way again. I'll see you in the next lesson. Welcome to Robertson CFP. Let us build your future together.